China's 40-year economic boom is coming to an end. Yes, you heard it right. The economic superpower is struggling and the dream run is about to fall down as per experts. The slowdown in China's economy is structural, dating from the end of China's unprecedented credit and investment expansion. Let us dive into the details and know what has happened and the future repercussions. According to economists and analysts, China's double-digit growth era is almost certainly over. The GDP that China does manage to maintain in years ahead will heavily depend on how the capital city, Beijing, adapts to all the structural challenges facing one of the world's largest economies, the impact of these new priorities, and the population concern. Republic of China's years of high GDP growth meant that its economy grew more than tenfold between the turn of the century and 2021, approximately from $1 trillion to nearly $17 trillion, according to various reports and studies. By contrast, the GDP of the United States of America, the world's largest economy and pioneer in development today, is a little more than double its size in 2000. China's economic boom refers to the rapid and sustained economic growth that China has experienced since the late 20th century. This period of extraordinary growth has transformed China from a largely rural and centrally planned economy into the world's second-largest economy, with significant global economic and political influence. Here are some key aspects of China's economic boom. Reform and opening up. China's economic boom can be traced back to the late 1970s when the Coven, under the leadership of Deng Xiaoping, initiated a series of economic reforms and an opening up policy. These reforms included the introduction of market-oriented policies, the encouragement of foreign investment, and the liberalization of various sectors of the economy. High growth rates. China has consistently achieved high annual GDP growth rates, often exceeding 10% in the early years of reform. This rapid growth has been driven by factors such as investment in infrastructure, manufacturing, and export-led growth. Export-led growth. China became known as the world's factory due to its ability to manufacture goods at a lower cost than many other countries. This led to a significant increase in exports, particularly consumer electronics, textiles, and various other manufactured products. Urbanization. China's economic boom has been accompanied by rapid urbanization, with millions of people moving from rural areas to cities in pursuit of better economic opportunities and lifestyles. This has driven demand for housing, infrastructure, and services. Foreign direct investment, FDI. China has attracted substantial foreign direct investment, with multinational companies establishing operations in the country to tap into its vast consumer market and lower labor costs. Special economic zones and preferential policies have been instrumental in attracting FDI. Infrastructure development. China has invested heavily in infrastructure development, including building an extensive network of highways, high-speed railways, airports, and ports. This has facilitated domestic and international trade and helped support economic growth. Manufacturing hub. China's manufacturing sector has played a crucial role in its economic growth. It has become a global manufacturing hub for a wide range of products, from electronics to machinery to it. Rise of the middle class. Economic growth has led to a significant increase in the size of China's middle class, which has driven consumer spending, both domestically and on international markets. Economic challenges. Despite the impressive growth, China faces several economic challenges, including income inequality, environmental pollution, an aging population, and debt-related risks. Global economic impact. China's economic boom has had a profound impact on the global economy. It is now a major trading partner for many countries and has become a significant source of international investment. Nothing else in China's economy has replaced the property sector as a driver of growth, which explains why economic growth has slowed so dramatically over the past 2 years. Compounding these problems have been the Chinese leadership's crackdowns on dynamic private sector firms and industries, such as internet platform companies and education and tutoring firms. The campaigns have ended, but the damage to private sector confidence will take much longer to repair. Employment among small businesses and service sector enterprises suffered considerably under COVID-19 restrictions and has not yet healed, impacting household incomes and consumer spending. Without fundamental reforms, corruption will always be a feature of policy transmission mechanisms in China. Implementing solutions to the many structural and cyclical problems China faces would be daunting for any polity. However, in a system that has become conditioned to the current set of rewards and punishments, it will be especially difficult. Looking ahead, observers of China will be alert for evidence that the calculus of risk or reward is changing. country's central economic planners and managers be given more leeway to craft innovative policies? Will entrepreneurs risk their capital in new ventures that are not tied to the state's apron strings? And will local officials experiment with solutions to local problems? Higher growth for China, in other words, doesn't mean a better economic outcome in future than a lower GDP growth, as it does for most other economies in parts of the world. It just means that the authorities and supervisors were more willing to employ natural and other resources for manifesting an economic activity, whether or not that activity is productive, helpful, or sustainable. System inputs cannot depict anything about the performance of the economy, as it depends on various other factors. Because GDP growth in the Republic of China is an input factor, it cannot be a measure of how well the economic system performs and yields. To compare both, genuine growth can be thought of as sustainable growth opportunities, and sometimes vice versa, whereas inflated growth consists mainly of non-productive or insufficiently productive investment in both the primary sources of infrastructure and real estate, as it is how the economies function. The purpose of inflated growth, from my understanding, is to bridge the difference between genuine growth and the GDP growth target, which is necessary to achieve political and economic objectives. To put it out simply and in a precise way, a better economic outcome for the Republic of China is merely not more GDP growth and target, but rather more genuine growth and less inflated growth, whereas a worse outcome is the opposite of this: to achieve a politically and economically acceptable level of activity as measured by GDP and all other efficiency rations. As everyone is aware nowadays, the target for higher prices says little about how healthy the economy is, and now it is dependent on other factors as well. The rise in debt itself is not necessarily a problem, but cannot be overlooked. While an accurate, systematic measure of the problem of wasted and exhausted resources in the Chinese economy would be reasonably complex. A disproportionate and ridiculous amount and share of Chinese debt goes to fund investments. This summarizes that, in principle, the country's debt-to-GDP ratio is reasonably unfair for the amount of inflated growth in China's efficiency calculations. One famous quote on economic growth is attributed to Robert F. Kennedy: "GDP measures everything except that which makes life worthwhile." This quote highlights the limitations and shortcomings of using gross domestic product, GDP, as the sole measure of a nation's progress or well-being, emphasizing that economic growth alone does not capture the full spectrum of human well-being and happiness. It underscores the importance of considering other factors such as quality of life, social welfare, and environmental sustainability when evaluating the true impact of economic growth. China's rise as an economic powerhouse is undeniable. It faces a set of intricate challenges. Sustaining high GDP growth is a paramount task as the economy matures, and managing an aging population imposes strains on social services. Debt levels are a concern, and there's a need to transition to a more consumption-driven and environmentally sustainable economy. Additionally, trade tensions and political dynamics can affect global economic stability. While China's ascent continues, addressing these multifaceted challenges is essential for ensuring long-term prosperity and stability. How China navigates these hurdles will not only shape its future, but also have global repercussions. With more videos and content, we will be back. Here is a reminder to like the video if it was informative and added some value for you. Please comment on your views of this story, subscribe to our channel, and wait for more exciting videos.